Hello, hello, hello everyone. It's me, NYSE Einstein from the Florida New York Stock Exchange. Rarely do I get really confused and not be able to analyze what's going on. But there's a lot going on and I'm really trying to get a handle on it. So we're coming into a big quad witch, we're coming into an S&P rebound, we're coming into a huge Russell rebound next week. So these are some of the busiest days of the year, second quarter. We're coming into an interest rate raise, which we got yesterday, which is big, and then two more on the table for the end of the year. That 9 months ago would have sent this market, I think, into a bit of a fury. But you've got the fight going on, the two dialogues going on, that we are in fact raising rates because the economy is doing better. So there are people who are buying the market in the advent that down the road, long term, the market's going to do better because the economy is doing better. And the normal triggers that happen when interest rates raise and the market cannot absorb that and it's a sell trigger, then the market reacts in a negative way and they buy the banks, they buy bonds, and then they sell the market traditionally on interest rate raises. But we're in a whole new level of mode here, right? We had interest rates way, way high before. We had them at zero for a number of years. We're on our way back up. At the end of the day, net, we're still really low. In a market that's up double digits, a couple points here and there on the interest rates is not significant relative to a market that's up double digits. Just think about it. You borrow it for 2 and make 20 on it. It's a win-win situation. So you've got the double narrative. You've got the paradox of the people who feel like, you know what, sell pressure should be coming into the market due to raising interest rates, but raising interest rates are happening because of positive economic data. This market's shown that it can absorb it. The market whole narrative is positive. We're at 25.1, 25.2. No matter what happens in the Dow, even though we're down 30, the Russell is up 10, the SPYs are up 10. There's value being bought in this market. Mid cap, small cap, S&P. People are buying the market. What's happening in the FANG? Up 70. So the market's being roared on by the techs, roared on by small and mid cap value stocks. S&P's on fire. Transports are flat. Oil, as I told you, bottomed out at that 64.5, 65 level. That's out of the headline. We're heading back up to 72. Close today at 67.
Tucky, I love you.
Tucky, I love you. So there's a lot going on. Tomorrow will be a lot more telling day. The volume was 950. Most of it happened on the bell. Big buy program, big sell program, money coming in and out. Horizontal market overall. The key economic news that you need to know is that all the geopolitical headlines are insignificant. Everything coming out of Washington is insignificant. The tariff thing actually brought some positivity into the market. We're looking at 1,300 products being tariffed. Now there's only 8. So you know what? That game is catch as catch can. We don't know what that's happening. He'll throw something out, he'll pull it back. Net, at the end of the day, the things he can put your teeth into and grab a hold of is that economic data is causing this market to raise its interest rate. The market's doing good, economy's doing good, interest rates at a reasonable level, and unemployment's at a record low here. It's all good. It's a win-win. NYSE Einstein, inside Vershoft. I love you. I'll see you tomorrow.